Hey, good afternoon. Neil here with end of week wrap up, and may as well, I guess, start with the S&Ps. We could do SPX, S&Ps, futures. It's all the same, but this happens to be the futures chart, and pretty interestingly, you've got almost a full recovery in the futures back to the all-time high, and so, well, and by the way, that's on an adjusted contract basis too. By the way, from the December into the March, the old December high was actually 61.35. So, from that measure, we've made it back, right? On a non-adjusted basis, we've made it back. But when I do it here this way with the adjusted, I've got the retracement back into the 887 fib, and we had a little tight range follow through, kind of a formation today. So that tells me, look, we've been up, and up. I mean, look, it's pretty ridiculous actually. 58 by almost 6,200 in, I don't know, 10 days. I mean, it's kind of silly. So what I want to do is prepare for, well, what if, right? The up is easy, just new all-time highs. I mean, just the up is really simple. Just target 61.65 in the SPX. The up is really simple. But the where do you want to buy it in order to get there is the question. Now, here, I got two support levels for you, and I'll tell you which one I like. First is 6092. And we went into that conversation kind of at length today in the trade room. That's an ES futures level. That's only the first, and I don't even like it. That's just the first. What I do like is this next level down here at about 60.40, even 35 or something, but 60.40. Now that I like. And we'd want to give that a chance to hold. That's only 100 points too, by the way. I mean, it could cover that, and it could cover it in one day, but certainly cover it in like 2 days, next week. But I have to give, by the way, I have to give each of these a chance to hold, right? So on the first pullback, I've got to give the 92s a chance to hold. You buy them, you give them a little wiggle. They, as soon as they bounce, you're slamming break-even stops and saying, okay, you want to go, you go, right? And by the way, too, on that approach, you don't have to buy the dip. You can let it dip. Let it see if it wants to dip through there a little bit, and then catch it on a buy stop on the trigger on the way back up. That way, whatever the low of the move was before it triggers on the buy stop on the trigger on the way back up, that's your stop. And that's pretty simple. From there, you just target back to the highs and new highs. I mean, it's pretty easy. And if that doesn't hold and it stops out, well, then next up would be the 60.40. Easy peasy. I'm going to go to the premium video next, and we're going to look at some dollar index and some euro, because we have some interesting things to look at there. Good trading. Catch up with you next time around. Until then, look forward to seeing you next.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me